Good afternoon, everyone. A warm welcome to all of you joining us today for our today's session of Equity Edge, the discussion series brought to you by Softlogic Stockbrokers. Our primary objective is to equip our valued investors with the most insightful and up-to-date information on equity investments so that you are ahead of the curve. So today with us for our discussion we have Hemas Holdings PLC, and as all of us know, Hemas is a leading diversified conglomerate in Sri Lanka with a significant exposure in healthcare, consumer as well as in mobility. Listed in 2003, the company has demonstrated a remarkable earnings trajectory over the recent years. And also a very specific thing that we've noticed about Hemas is they've actually made quite a few strategic moves over the past years so that they can actually concentrate on their core strengths, and also they've made a notable amount of investments in order to bolster those core segments. So if you particularly look into their financials in 2024, the latest concluded financial year, Hemas managed to post a bottom line of above 6.1 billion, which is a remarkable performance, recording a growth above 43% on a year-over-year basis. So, without further delay, it is my pleasure to introduce to you our guest speaker for today, who is Mr. Moiz Rehmanjee, the Group CFO of Hemas Holdings. So, Moiz, good afternoon to you, and a big thank you for joining with us today.
Good afternoon to you too as well, and good to be here. Thank you.
Okay, so I think we can dive straight away into our discussion now. Moiz, first of all, I would like to congratulate on the performance of Hemas Holdings for FY24. So I think to begin everything, shall we have a quick overview on the financial highlights of Hemas for FY24? I think that will be very interesting for our audience.
Sure. But let me start with the headline punchline, which is that Hemas earned a profit of 6.1 billion in this financial year, which is a 43% growth compared to last year. So this has been our first year since the financial crisis, which was FY23. And during the last 18 to 20 months, Hemas has gone through this stage of self-discovery, where we have come to realize that we hold quite few strong defensive sectors that hold well during tough times and do well during good times. So apart from the profit itself, which has been a record profit that Hemas has earned in its history, if you look at all the other financial matrices, it has been pretty much on the green side. Be it from a cash flow standpoint, be it from a strengthening of the balance sheet standpoint, it's all been on the good side. We invested in significant amount of capexes this year, apart from the acquisition also that we made, where we acquired the remaining 25% of our stake in Atlas. There was also record capexes that we invested in this year. In fact, one of the highest capexes that we've spent in the recent past. So despite all of that, there's some very active focus and rigor around working capital management, around cash flow management. So despite these big investments, the company was still able to sustain in the year with a clear balance sheet of net gearing of almost zero. So that is testament to the not just the profit, but also to the quality of the profits that the business generated through these sectors that we're in, and through the rigor behind managing them as efficiently and effectively as possible.
Thank you so much. So yes, I think we can move over to the next set of questions which I have, which is where I would be starting over with your segments. So we'll start from healthcare. So my first question is basically on the pharmaceutical industry dynamics, Moiz. So what do you think? Have the industry dynamics for pharmaceuticals changed dramatically over the recent past, or how has it been, Moiz, overall for Sri Lanka? Have we witnessed a growth in terms of on year-over-year basis for 2023 for pharma, or even for the first quarter of 2024? What has the industry dynamics been for the segment? And similarly, since Hemas is one of these leading private sector pharma players, how has things been with Hemas pharma market share growth? Have you all witnessed any significant improvement or a change in your market share position as of when this quarter over the last few months, or how has it been? If you can explain.
Sure. So starting off with on the distributorship vertical of the Hemas Pharma business, where it's principal based, we are the market leader and we command 33% of the market share, 1/3 of the market share, which effectively means that 1 out of every 3 medicines that a Sri Lanka consumes comes out of the Hemas home. In terms of what the growth has been, fact of the matter is, in volume terms, there has been degrowth over the past couple of quarters. But the good news is the extent of degrowth is declining. So whilst we face some double-digit growths in double-digit declines in FY23, in this financial year, those declines have dropped to single-digit. Of course, it doesn't reflect so prominently and obviously in our financials, because the rupee value of the revenue growth has far surpassed. It has basically blurred the impact of the volume drop, because the price increases have been there to reflect the currency devaluation that we have seen in the last 24 months. In terms of dynamics, the key challenge, of course, in this industry is, number one, from a regulatory standpoint, the stringent price regulations that are there, at least across the regulated molecules. And these price regulations do create a lot of confusion and do create a bit of anomaly, especially because it doesn't really come with a fully fledged transparent formula. It's relatively arbitrary. It depends on what the economic climate is, and what the state of disposable incomes of the people in the countries. So one of the things that Hemas is lobbying for quite actively is to bring some transparency into it. True enough, prices need to adjust with the global with the rates at which we import the molecules. It needs to adjust with the exchange rates, etc. But there needs to be a formula around it, and that's something we're working towards. It brings more transparency, it brings more consistency, and more predictability. That is the biggest challenge from a regulatory standpoint. From a market standpoint, the fact of the matter is, in Sri Lanka, in the businesses that we are in and across almost any business, people's disposable incomes are squeezed. As a result, the amount that they're spending on the higher end branded molecules, the amount they're spending in general, we do see it coming down. Again, it goes back to the volume drop that I mentioned earlier. But from a Hemas standpoint, we do stand to some extent to advantage also from this, because it's about the portfolio spread that we hold. On one hand, we represent almost all the large MNCs in terms of the principals in our distributorship pharma vertical. Apart from that, we also have our own pharma manufacturing arm. The pharma manufacturing arm basically churns out which is the Morrison plant at Homagama. It churns out the Hemas branded generic molecules, and these products are able to be sold to the market at competitive prices, and it also yields the highest margins to the business. So whilst the ability of consumers or patients to buy the high-end high-price molecules get curtailed, their appetite and their willingness to shift to the locally manufactured branded products increases, and that's why Hemas is well placed to fill in that gap as well. So that's giving a quick and good overview in terms of what the market has been like from the pharmaceutical side, and how Hemas is placed within this environment to give the best to the patients, at the same time to give the best return to the organization itself.
Yes, thank you, Moiz, for that very detailed answer for first question. Then I think you've basically touched base on my next some part of my next question as well. So let's move over to your Homagama manufacturing facility. So it's a very, very good initiative that Hemas has taken to have a manufacturing facility in the country, which is one of these things which the country is lacking, where Sri Lanka will really need to look at the local manufacturers to get down to produce their own medicine within the country rather than only relying on importation of medicine. So how has the capacity utilization levels been at the Homagama facility over the recent past, and what exactly would be the future outlook for this Homagama facility? And just want to know, there are a lot of molecules that are being produced, and there should be a lot of molecules which are, there should be a lot of standards and certifications where the companies will have to attain when you are doing these local production. So NMRA also plays a major role in these sort of processes. So where does Hemas stand, and what is the situation with regard to the Homagama manufacturing facility as of now, Moiz?
All right, so a lot of questions over there. Let me try and break it down. Starting off with the capacity. Yes, the capacity utilization of the plant has increased. We have surpassed the 50% mark in the last financial year. In fact, we are at 60% plus, and the company is now at a profitable level. But the filling of the capacity is not the primary plot in this particular plant, in this particular business model. Like I touched on earlier, when it comes to locally manufactured branded molecules under the Hemas umbrella, the margins are much more superior compared to the normal generic manufacturing that would be done. Hence, what we have pivoted in the recent few months is to focus on generating our branded molecules out of this plant, and the profitability of this facility and the profitability of that entire business is not just about the capacity fill, but it's about the mix of products that we churn out through that capacity. So the bigger representation that we have of our branded molecules, higher the profitability potential of the plant. So it's not just a capacity filling game, it's also a game of having the right mix of our own branded molecules. And on average, our branded molecules would command about 20% more in terms of margin compared to the generic other brands that we do, the other products that we do manufacture out of this plant. So the plot is that to get the mix, the right mix, the optimum mix, the maximum mix of our own branded molecules out of this plant. Now the question about how many of these molecules are out there and how many are in the pipeline for approval. So we do have one Hemas branded product which is out there, which is Metamo. And within a matter of months, this particular product has gained market leadership, and it also, as mentioned earlier, it commands a high margin even to the business. There is a whole pipeline of other products also which are in the pipeline for NMRA approval. So that is a natural bottleneck in this business. I would not call it a hurdle, but it is a bottleneck. But it's a natural bottleneck which is part and parcel of this business that we're in. So Hemas is very actively engaged to make sure that we comply with all the standards, that we meet all the requirements of the authorities, and we engage with them very actively to, as much as possible, fast track all the approvals that need to be obtained. And of course, once these approvals are done, we do have a good portfolio of products which will be released to the market, and we are quite bullish that this would yield us not just higher business volumes but also better margins that makes the whole portfolio look much more attractive.
Thank you, Moiz. So just a follow-up question on that. So we know government also plays a pivotal role. I mean, government is one of the main customers for all these local manufacturers who are engaged in this pharmaceutical industry. So as of now, what are the main buyback programs that is in place with Hemas? If you can give some color on that.
Of course, it is continuing, and we do expect it to continue because the buyback program, it does become a significant filler into the overall plant capacity, and that apart, Hemas is a reliable and consistent supplier to the government, and hence we are confident the buyback would continue. So whilst that remains a good part of the existing core business, the growth that we envisage and the growth that we are actually chasing will again come from our own branded molecules.
Thank you, Moiz. So yes, so we can move over to the future outlook of this segment now. So we know you all invested heavily on the Homagama facility, and now it's up and running. It's doing quite well, and we saw a few small investments come in this segment on and off over the past quarters. So what would be the future for this segment be? Will you all be aiming to further invest in this segment going forward? And also, given that this plant is having all the certifications so that you all use so that you all can produce for exports as well, will you be targeting exports over the next few years? So what's the plan?
Yeah, so you're right. It is a state of the art plant with all the relevant certifications and high standards which are being maintained over there. And there's been a significant amount of investment that did go into commissioning the plant. And like I mentioned earlier, the capacity fill as of right now is about 60+%. So there is no requirement to invest further in the foreseeable future because the capacity exists for us to fill in. In terms of priority, given the kind of pipeline that we have of pending approvals of the molecules that have already been developed, that's our focus as of right now, because that will immediately cater to the needs within the Sri Lankan market itself. But this our capability exists to pursue the export side at the same time. But it's not the low-hanging fruit as of right now. The low-hanging fruit is to clear the pipeline for the local market itself. And once you've gone through about 2-3 years of running this business stably and consistently, at that point we would always start pursuing the exports at the same time. It doesn't mean that we turn a blind eye towards exports right now. We'd always keep our eyes and ears open to see what opportunity comes around the corner. But what we are actively pursuing is what's the low-hanging fruit, which is the local market. But we are very confident, we're quite bullish that if not immediately, at least in the next 2 to 3 years, exports will be the second growth pillar that we pursue in this particular SBU.
Thank you so much. So moving on to the other aspect of healthcare, which is the hospitals. So Moiz, we've seen now people are coming out of COVID, people are coming out of that economic crisis little by little. Gradually we are coming to that normal state again. So about the occupancy levels at your hospitals, have you all seen any improvement in terms of occupancy levels at the Hemas 2 hospitals over the past few quarters? And going forward, what is the expectation? Can we expect the similar trend to continue? And another important thing that I would like to put forward at this point is, what are the specialty areas or the specialty treatments that Hemas hospitals are focused on at the moment? And over the past few months, have you all done any new add-ons or additions to the hospitals? Or how has it been in terms of hospitals, Moiz?
Okay, so occupancy right now is at the 80+%, which is a fairly good occupancy. In terms of growth, fact of the matter is that the demand for private sector healthcare is set to grow in the future in Sri Lanka. The simple reason being that eventually, if not immediately, people's incomes will grow. Medical insurance cover penetration will increase, and therefore more people are going to be seeking more medical attention. And the ability of the government, the state sector, to grow its capacity on free medical care is limited. Hence, the private sector is going to have to fill in. So Hemas is right now positioning itself to be ready for that kind of growth that's going to come about from a demand side. Our focus is on a couple of fronts. Number one, we want to expand into a city asset that provides a tertiary care medical services to patients. Right now, Hemas is located in the peripheries of the Colombo city in Vattala as well as in Talwatugoda, which has its own geographical advantage and it caters to a certain clientele. But to get to the cream of where the real returns come, we need to get in the tertiary care within the city space itself. How do we do this? The best avenue to go about this is actually M&A of any of the city assets that may be up for sale. So on that front, I don't need to elaborate in too much detail because it's pretty much the news is out there in the media itself, where there are some state assets which are for sale, and Hemas is one of the front-runner shortlisted candidates in the whole bidding process. But these are government projects, and it's not easy to predict really which way to go and what timelines it would take. But apart from that, there are our own internal organic expansion prospects also that we are pursuing. Number one, in terms of increasing bed capacity, where in one of our locations there is an adjoining land available which we would like to expand into and increase our bed capacity. Apart from the physical bed capacity increase, there's also the concept of virtual beds. To explain what that means in simple terms, it's basically maximizing the throughput of the bed capacity that we have in our hospitals. To put it differently, when a patient is admitted into a hospital for any surgery or any such procedure, the revenue that is earned from the procedure is what is earned on the first day when the procedure is carried out, whereas the second and third day of admission is merely the maintenance of the patient, where you don't earn the maximum revenues during those periods. So if we can have a secondary service, which is something that Hemas is working on right now, which is what we call the home care and the ambulatory care. The intent of this kind of a solution is where the patient is discharged almost immediately after the procedure is taken place, and the patient is taken care of within his or her own home through our home care and ambulatory care services. And that bed capacity is then in turn turned around for the next patient. So you'd maximize the turnaround of our physical bed capacity, and the virtual beds that we talk about are the beds basically within the homes of the patients who have gone through a procedure and a surgery within the Hemas hospitals. And the whole maintenance and healing and post-procedure protocols that need to be met are done in the comfort of the patient's home through our home care services. Now, this is advantageous naturally to the business, the hospital business itself, as I explained, but equally or more importantly, it's also advantageous to the patient.
Exactly.
Because it reduces the cost of medical care to the patient. So it's hitting two birds with one stone. We are catering to an increase in demand of medical care, of private medical care amongst our population, and at the same time easing the cost of medical services that the patient would have to otherwise bear. So these are two very top of mind strategies that we are pursuing to grow that business front as well.
Thank you, Moiz. I think you mentioned quite a few interesting things in that answer, so thank you so much for that. And another aspect, I think, in terms of expansions of hospitals, I mean, you were talking about the local expansions that you're planning to do. Go ahead with. How about the overseas expansions, Moiz? So basically, I'm asking you this because there was some news that Hemas hospitals had held talks with the authorities in Kenya to explore the possibilities to expand their footprint to that country. So what is the progress made in this aspect so far by the company? Are you all still going after this expansion strategy?
Let me first say that the answer to your question is more from a standpoint of what is our international expansion aspirations.
Exactly.
So Hemas is historically, I mean, we've been 75 years in business, and in Sri Lanka we are predominantly a homegrown company where its core and its pride and its portfolio is centered around Sri Lanka, which is something that has been our core, and we take a lot of pride in that. But we do see the need to now diversify ourselves, not just in terms of portfolio but also in terms of geography. Hence, we are looking at growth opportunities outside of Sri Lanka as well. At the moment, our international business represents just about 5% of the total portfolio. But going forward, we want to expand our international business to reflect about 25% of our portfolio. And let me just step back a bit more as well. I should have actually mentioned this at the beginning of our talk. On the strength of a strong financial performance, There is a long range plan that we have set out, which we articulated internally within Hemas itself amongst the leadership team, which is a 3-year horizon long range plan. It encompasses the different verticals and businesses that we want to expand into, the geographies that we would like to pursue. And it also sets out a vision to 2030. So from a 2030 vision standpoint, Hemas aspires to become a $1 billion business with 25% of our portfolio in the international space. And from a 2027 standpoint, the kind of growth that we want to achieve in order to get to the 2030 vision requires a portfolio investment of $100 billion. So a $100 billion war chest is what we have identified as what we need to get to the growth pillars that we want to achieve. And it's tied up with the long range plan that we have prepared for the next 3 years, and this has been pretty much sanctioned by the internal approval processes and signed off by the respective business unit heads as well as something that they are going to pursue in terms of growth. So within that whole long range growth plans, international business is a key pillar. So when we talk of international business, what exactly does it entail? Let's first talk of regions before we come to which businesses. So naturally South Asia is out there, and we are already present over there. I'll come to that a bit more in a while. We're looking at Middle East market, and of course we're looking at East Africa, which is where Kenya comes in.
Yes.
So as far as South Asia is concerned, Hemas is already present quite actively in Bangladesh. It's a business that we have been in for the past 15 or so years. It's a market in which we have grown our flagship brand, which is Kumarika, which is amongst the top market leaders over there, compete against the MNC giants. And in the recent few months, we've also launched a few other new products in that market, which are also growing quite well. So as far as the international business is concerned, Bangladesh is the low-hanging fruit. We are already present there with a decent portfolio. It's a well-established business. We have a fully fledged team over there, which is quite synchronized with the Hemas setup, and we are quite bullish and confident about that team. So as far as the international business is concerned, that will be the low-hanging fruit that we are going to invest further into in the foreseeable future, because apart from us already having a portfolio there, having a good team over there, the Bangladesh market is attractive. The demographies, the economic dynamics, it's got all the salient features that makes it an attractive market, and hence a market that we want to grow into. So consumer goods, we are definitely pursuing growth in that market. And apart from that, we are also looking at areas where we can get in the market in the learning segment, which is our stationery business. Kenya is the latest market that we have been pursuing in the recent few months. So there are a couple of sectors that we are pursuing in Kenya. Hospitals is one that we are having conversations on.
Okay.
And we see it as a very attractive market for the healthcare business as well. However, we need to acknowledge that whilst we keep the conversations going on what the opportunities are in Kenya, even in the healthcare space, there's a lot to do in the healthcare space within Sri Lanka itself. And hence our priority remains and our focus remains on how we grow healthcare within Sri Lanka for the time being. But because Kenya is an attractive market, there are other spaces in Kenya within our existing portfolio that we can look to expand into, and that's basically the consumer space, which includes the learning segment as well. So I look at a couple of options in Kenya. I would not say that hospitals is the one that we narrow down to, or healthcare is what we narrow down to. It may likely be in the consumer space, but in general, Kenya is ripe for us to invest into any of our segments. But where we prioritize depends on what our priorities are domestically and what we have the bandwidth to extend into a foreign market as well.
Got it. So I think what we got from this answer is basically Kenya has a lot of potential, not only for hospitals but for most of the businesses Hemas is currently working on. There is a lot of opportunity in Kenya. So going forward, I think we might be able to see a lot of new developments happening in Kenya. with Hemas? Is that what you were trying to give our audience? Will it be a long-term, on a long-term perspective that you're pursuing these opportunities, or will it be a very short to medium term sort of a goal that you all have set?
We are pursuing it very aggressively.
Okay.
Yeah, but as with any business and any new venture that we get into, there are speed bumps, there are hurdles, there are challenges. Hemas is a conglomerate. We're pursuing new businesses all the time, new opportunities all the time. We are quite confident of East Africa as a potential market that we can get into, and hence we're actively pursuing it. But and it's something that we're pursuing as we speak. But how that turns out would depend on how things fall in place. But it's certainly something that we're pursuing quite actively.
Thank you so much, Moiz. I think that's a very, very detailed and a very informative answer. So I think you took the step ahead so that I can move over to the next segment. So you've touched base on consumer in your previous answer as well. So let's move into some of the consumer sector specific questions now. So dealing with cost side pressures as well as driving the volumes would have been a very big challenge. I mean, it's not only for Hemas, it's understandably for everyone who is in the consumer space. So we've seen a lot of challenges. I mean, particularly Hemas would have also encountered all of these. The taxes would have hindered the purchasing power of all these consumers over the past quarters, and there were high electricity tariffs. The utility tariffs would have sort of burdened all the manufacturers in particular, and there would have been other cost side pressures also which you all have dealt with. So how has Hemas actually dealt with all of these over the past few quarters, and going forward, how would be the strategy to sort of deal with these things? And one interesting development that we've seen now is Sri Lanka is coming out of that crisis levels. The economy is bouncing back and gradually seeing some improvement. So in terms of volumes also, what are the initiatives the company has taken to drive volumes? Because driving volumes in such challenging situations would definitely be a very, very hard thing to do. So what has Hemas done, and what is the plan going forward?
All right. So since Sri Lanka was quite swift and fast in achieving economic stability, soon after we did stabilize, early part of 2023, there was also an expectation of very quick recovery, and hence there was the expectation that by end 2023 consumption is going to grow, consumerism is going to grow, etc. That did not happen, because what we realized and learned is that all the stability did get achieved quite fast. The recovery and growth will not necessarily be as fast, and hence the volumes have stagnated, actually degrown in most of the businesses that they're in. And even as we speak, we don't see a turnaround in the volume growth in the markets that we operate in. We are cautiously optimistic that by end of 2024 there would be a turnaround. I mean, interest rates they continue to taper away, and somewhere down the line there will be a turn around the corner where consumers will be back to purchase, and hopefully they'll be back to purchase with vengeance. But as of right now, it is subdued. So again, whilst we remain cautiously optimistic about that turnaround and we prepare for that event when it comes about, till then our focus is internal. Okay. So what's our internal focus? Number one, from a middle line standpoint, productivity improvements, tight overhead management, and supply chain efficiencies wherever we can find it. And of course, the whole digital front, which caters into the making the organization much more lean and efficient, the digital transformation piece of it. So that's the internal focus as far as making our business much more leaner, agile, and efficient is concerned. Secondly, rebalancing our portfolio. Okay. So Hemas, I mentioned at the beginning as well that last 18 to 24 months we've gone through this stage of where we have rediscovered ourselves. So one of the capabilities that we've realized that we've had is our ability to innovate, to cater to niche niche consumer requirements, to identify a particular need that consumers have in the market, to innovate a product that caters to that need, and lastly to have the back-end supply chain being able to manufacture and deliver product at the right sweet price point that makes it interesting and affordable to the consumer. Specifically, I'm referring to the personal care and beauty care spaces. There are a lot of new categories that we have launched in this particular area in the recent few months, which not only comes with a lot of good growth prospects, but also comes at premium margins. So what's interesting here is, even in difficult times, you find that consumers, when offered the right product at the right price point, even though it may not be an essential, they're prepared to pay for it. And some of the recent products, brands in the category of beauty and personal care that we have launched has seen this success. And they've achieved significant growth as well, to the extent where we could say that these new categories that we have launched, they've achieved market leadership in the modern trade space, which is the channel of the future. So our ability to innovate, to cater to the new emerging requirements of consumers is something that we've successfully executed in the recent few months. And it also goes back to the previous point I mentioned about Bangladesh. The new products, the NPDs that we launched in Bangladesh, which now make up quarter of our total revenue. Till about 2 years back, Bangladesh was pretty much driven by our value-added hair oil. But 2 years back, we launched a few NPDs over there, which again were good innovations to cater to the consumer need in that market. And these NPDs now constitute 25% of the total revenue within our total portfolio. So our ability to innovate and develop products to cater to the unique requirements of the consumers in that specific market is a strength that we have discovered within ourselves. And that's something we continue to invest in, to bring new products out there that achieve overall volume growth to the business portfolio, and equally importantly, improve the quality of the profits through higher margins. So that's an area we are quite bullish about, we are quite excited about, and something that we're investing into, and we will continue to invest into the future as well.
Thank you, Moiz. That's very interesting to know. And another important thing that I would like to touch base here is something that will definitely impact the consumer segment's price points, the exchange rate as well as the global commodity prices. So, I mean, these are very pivotal, I presume. So, how has Hemas basically dealt with these aspects over the past few months? Because for a fact we know the exchange rate, I mean, the currency has strengthened so much against the dollar in 2024. And if you look at the global commodity prices, if you take palm oil as an example, had seen some appreciation over the past few months, and there are some commodities which have been very, very volatile in the global front. So there's a lot of volatility in the global front as well, but exchange rate otherwise. So with all these factors, I mean, how have these things impacted when it comes to your pricing? How has this impacted Hemas' price points of the consumer segment products? If you can explain that to our audience, I think that will be very interesting.
Okay. So in Sri Lanka, it's been a complete mixed bag, right? We saw the currency depreciate up to 360, 370 levels, and in the last financial it has appreciated again back to the 300 levels, which nobody expected.
Exactly.
As far as commodity is concerned, it's been mostly it has been declining. In most of the commodities, key commodities that we depend on, it has been declining in the last financial year, and these things do fluctuate. But what we're finding out is, why is the rupee appreciating so much? Because we are in a, you could say we are, as a country, we're in a deflationary environment. Demand is not that much, hence it reflects in the volume declines as well across all the businesses that we're in. And hence rupee is appreciating, and the expectation is also out there from the consumers, to have price reductions. So we have not been able to take as much as price increases as we would like to, but fortunately that did not have a significant impact to our margins, because we had the upside in terms of the supply chain side and also the commodity prices from the exchange rate side and from the supply chain side. Having said that, right, to ensure that we remain competitive on the whole cost of maintaining comparison in our cost of goods sold, there is a lot of rigor that has gone into the whole supply chain side of our business. So even in the year that we just concluded, which is FY24, the supply chain side is something that we really invested a lot on to make sure that we got the maximum supply chain efficiencies. And a lot of the margin improvement came from that element as well. So whilst we invested in the masstige product categories, which yield higher margins by design, we also took a lot of rigor and focus on the back end side towards the supply chain efficiencies, which drew a lot of efficiencies as well into the system. And that's something we will continue to pursue as we go along. And now that we set the long range plans in terms of the business that we want to focus in, the business that we want to grow, these long range plans also entail opportunities for us to have group synergies. So we so far pursued supply chain strategies from individual SBU standpoints.
Okay.
But one key productivity improvement that will take place in the next few years is to what extent can we drive productive improvements to group sourcing, which is an avenue that we have not pursued as aggressively as we could have, being that we are a conglomerate of this size. But it's definitely a vertical, it's definitely a pillar that we're going to pursue the next few years.
Thank you, Moiz. Yes, another question to you on consumer segment. We know for a fact Hemas, the brands, the home and personal care brands are amongst the top in the local market, in the domestic market. So I think it'll be interesting if you could provide some insights into the market position in the home and personal care space within the domestic market currently. If you can give some insights onto where Hemas is positioned, the products are positioned as in some of the key products, I think that'll be very interesting for our audience to know.
Okay, so let me give you a very broader context to this. If you take pharmaceuticals, so my answer to your question will cut across all our businesses.
Sure.
If you take pharmaceuticals, 1 out of every 3 medicines that a Sri Lankan consumes comes from Hemas. If you take personal care, 1 out of every 4 personal care products that Sri Lankan consumers consume comes from Hemas. Within consumer, if you take baby care, 1 out of 2 baby care products that Sri Lankan consumers consume comes from Hemas. If you take the learning segment, which is stationery, 2 out of 5 every stationery product that a Sri Lankan consumes comes from Hemas. So that's giving a very broad flavor of our market leadership across every category that we operate in, and that's something we're very focused and bullish about, that the categories that we work in, that we operate in, that we achieve gain the top 3 leadership spaces, and that gives us not just the attractiveness that strategy is not just about the attractiveness of the market, but also the edge and the advantage that it yields to Hemas by having that kind of market leadership in the categories that we operate in.
Thank you, Moiz. Understood. So my last question, I think you touched on Bangladesh a little bit in your previous answers as well, but given that it is very, very important in terms of your consumer business, can we have a little bit more insights on Bangladesh? So basically, how is Bangladesh faring at present? And are there any new challenges in developing the consumer business in that region? And you spoke about Kumarika hair oil, which has been one of your iconic products, which you all marketed in Bangladesh very successfully over the past years. And so what is the growth plan for Bangladesh going forward? You mentioned there's a lot of opportunity in that country. So I think it will be very interesting to know a little bit more as to how Hemas is planning to move ahead with Bangladesh.
Sure. Let me just recap a bit again on the NPDs that we launched in Bangladesh in the last 24 months. We entered the soap category. There's a brand called Actisef. We have always been the value-added hair oil range, but we launched a new variant of hair oil which is called Colombo with a K, which is pure coconut oil based. There's another hair oil variant which we launched, which is called Eva, which has the essence of onions in it, something that the Bangladesh market appreciates.
Okay.
So these NPDs are now yielding 25% of the total revenue. Apart from that, what we see in Bangladesh is a fast growing market. It's a very aspirational market with a growing middle class. As the economy itself, it's becoming a significant player as year on year. And with the growing aspirational middle class, we expect people's appetite, people's desire, people's ambition to improve their lifestyles, to consume better products, to have more varieties, to have more choices, to be just growing. And we want to fill into those ever growing needs. So, for example, men's grooming is something that we see a lot of scope in Bangladesh, something that we want to innovate and develop products to launch over there. And there is a pipeline of other categories also that we have identified. So the same success that we've achieved in terms of launching new NPDs that have grown well, right, in the last 24 months, even our existing product, which is the flagship Kumarika value-added hair oil, it has gained market share in the last 12 months. So we plan to continue that same momentum, give it the same focus, give it more focus and more attention in the years ahead. And we have been giving it that increased focus in the last few quarters, and we want to continue giving it that focus in the years ahead. And more importantly, invest into Bangladesh market to grow it, because that is the low-hanging fruit. As I said earlier, it's a business that we've been in the last 15 years. We are very comfortable and familiar with that space. We have a fully fledged team, a fully operational business model over there. And as far as the international expansion is concerned, low-hanging fruit, we want to invest more into that business in the future to cater to the ever-growing demand for new products that the market will have over there.
Thank you, Moiz. So I think that explains it well, that Bangladesh will see further growth. I mean, despite the challenges, which I know at the moment in the country, challenges are everywhere, not only in Bangladesh. These are so many challenges in Sri Lanka as well. So definitely, I think there'll be a good positivity coming out of Bangladesh in the forecast years. Am I right? Okay.
We are bullish.
Thank you. Since you touched base on some of the new product launches which you had done in Bangladesh, just one quick question before I move into the next segment. How about the new product launches that you all have done in the local market? And particularly, I mean, it has been, what we've noticed is Hemas has been one of these leading conglomerates who have aggressively, done the new product launches in a very, very frequent manner. So I think our listeners will be interested to know what are the main aspects that you all focus in when you all are aiming at a new product launch, and how have these new products given in revenue? What sort of a revenue contribution have you all seen from the new product launches? If you just focus on FY24 itself, what sort of a revenue contribution has these new product launches given for Hemas in particular?
Sure. So the magical phrase to answer your question is the word mastige. The products that we have focused and launched during this period has been centered around that particular concept of mastige. Best explained by way of an example. So a new brand, a new product that we launched in the recent few months is Vivia, which is a rice-based product which incorporates the essence of Sri Lankan goodness, and it caters to the feminine beauty care space. Okay. And rather than giving away specifics of the numbers, I would just give some context on the kind of growth it has achieved by saying that it is now the market share leader in the modern trade space, which is the channel of the future. So those are the kind of products that we are investing into, and those are the kind of areas that we want to grow into. And these products, again, they cater to the changing and growing and new consumer needs that we are innovating into, and they bring in the more attractive margins into the Hemas portfolio. And Vivia is one example. There's also the whole Prasar range that we've got into, and that's what we are investing into in terms of the future and launching new products into.
Thank you, Moiz. Thank you so much. So a few questions on Atlas. We really can't leave Atlas out when you're talking about the consumer segment. The learning segment is very, very important for Hemas. So we've seen a good pickup in Atlas in terms of earnings. We've seen a good recovery in Atlas over the last few quarters. I mean, seasonality plays a pivotal role. The back to school season has a very interesting part to play in Atlas's earnings cycle. So what is the future plan for Atlas? And we are again hearing, I mean, you mentioned about this as well in your previous answers, that Kenya would be another potential market to expand your learning business, the learning segment as well. So what would be the future for Atlas? Any plans for expansions, and how are you all going to drive the local business going forward?
Okay. So let me start off with just saying again that Atlas has total market leadership within Sri Lanka, 60% plus of the market share. So it means 2 out of 5 products that Sri Lankan consumers consume on the stationery space is purchased from Hemas. So with that kind of market leadership, the potential to grow gets limited. Hence, a focus on Atlas in the recent few months and quarters has been around productivity improvement. And that's an area that the business does execute well on. The leadership team and the focus, the capability, the experience, and the trust behind driving profit improvement through productivity improvements is something that's well within its strength. And it's something we continue to invest into as well, by also bringing the whole digital element to how we can further improve on the productivity side. In terms of growth, starting off with within the Sri Lankan space and also overseas, is what are the adjacencies we can get into that piggyback on our existing product portfolio within Atlas. EduToys is one example. That's something that we can get into. There is also the Atlas World that we're investing in, which is the online platform that encompasses the different elements of the whole Atlas experience and the products that we offer to our consumers. So these are areas that we are getting into to drive the growth, right, and also to get into the more premium segments that yield higher margins. And of course, you touched on it as well in your question. How can we take this internationally? And the geographies that we're looking at to grow Atlas into, to go stationery into, to go our learning segment into, rather, right? Again, concentrate on these geographical locations within South Asia, within East Africa, and as much as we're investing our consumer goods within Bangladesh, the learning segment is also an area that we're looking at to grow into Bangladesh as well.
Okay, thank you. I think a very insightful answer. Thank you so much. So let's move over to the last segment, which is mobility. A quick question on mobility. So what are the growth plans for mobility going forward? It's comparatively smaller than the other two, but there's a lot of potential in mobility as well. So what lies ahead in this segment, Moiz? If you can quickly give us an answer for that.
Sure. So logistics is definitely a growth space within the Sri Lankan context, and mobility is the cluster that we have, which is within that space. So there are a lot of avenues that we are pursuing right now, but it's a bit too early to talk on specifics around those. But importantly, as far as mobility is concerned, we represent some good agencies in Sri Lanka, Emirates on the aviation side, Evergreen on the shipping side, and these businesses have the highest ROCs within the group portfolio. So they are small businesses, less than around 5% of the total group portfolio, with high ROCs, high cash returns, and for that reason it makes them attractive to hold on to. But what we expand that into, the prospects and the space, is what I just touched on, but it's a bit too early to really get into any specifics as of right now.
Thank you, Moiz. I think my set of questions are done, but we've got quite a few questions from the audience as well. So I think let's not forget the audience questions and let's quickly move over to them. I have some selected questions because we've touched based on most of the aspects that they've asked questions on. So the most interesting question out of the lot, and I think you've touched base on this in one of your answers earlier as well, the $100 million investment, Moiz, the investment strategy of Hemas going forward. So I think it's a very, very interesting thing. It's something very new to all our investors. So I think they need a little bit more clarity on that. Maybe I think you can provide as to, this is a 3-year plan which you all have put in. So what are the key areas of focus and the expected outcomes from this significant investment, Moiz? If you can briefly, give some idea to our audience, I think that'll be very, very great.
All right. So first of all, the $100 billion is a war chest that we have identified that we want to invest into towards our growth, which is in line with the whole LRP that we've carved out and articulated within the business, which has been signed off by all the business unit heads to be driven by the respective MDs in their individual spaces.
Okay.
Which areas we will grow into? It's going to be around our consumer and healthcare spaces. We'll be looking at refreshing our total existing portfolio. I already took a few examples earlier, and there's more of those that we'll be pursuing. We'll be looking at a few new verticals, especially in terms of inorganic growth, M&A side,
Okay.
right? And again, a couple of leads I already spoke on and things that we are pursuing. Our investment will also go into businesses that will yield margin improvements, and also invest into productivity improvements in our existing business, which also requires some investments. We're looking at 300 to 400 basis points improvement in our margins through this growth that we achieve. And of course, the internationalization. So it's broadly within these spaces,
Okay.
and within these little avenues and chambers that will be pursuing the growth. So as a conglomerate, we will continue to do those. What I touched on is, what's within our purview right now, which is within our horizons. And as you go along, there'll be more that we'll be pursuing. But it's a portfolio that will come together. Some will work out, some will not. But end of the day, the portfolio will fall into place in line with the LRP that we're pursuing. And these ups and downs, successes, failures will always be there as part of the growth journey. What's important, right, finally lands. And there I would touch on a very important milestone that we are now realizing within our existing portfolio. I mean, Hemas over the last few years has also invested into some new businesses, divested some new businesses. As of right now, all the businesses that we have stuck onto and held on to are all making profits. So that's testament to where we will eventually land once you go through the journey of the pluses and the minuses.
So thank you, Moiz, for that very insightful answer. Moving into this question which we have received, as a group, what are the main obstacles faced by Hemas at present, and what measures have you all taken to navigate such circumstances?
So obstacles are part and parcel of business. Sri Lanka is no stranger to obstacles, and the people of Sri Lanka are no stranger to obstacles, and Hemas is no different. We all remember 2022, what we navigated through, the most difficult times, and Hemas also navigated through those obstacles, and we came out stronger. And the first financial year after the financial crisis, which is what we just concluded, FY24, we posted record profits in Hemas' history. So obstacles are always there, and they will always be varied. Different forms, different flavors, different elements of obstacles will come about. What's important is that as an organization, you don't lose sight of your goal. We have always been very clear on excelling in the businesses that we are in. We continue to be clear on that, and now we're also extremely clear and focused on the long range plans that we're pursuing and the growth that we're pursuing. So long as we keep our eyes razor sharp focus on those goals, we would navigate those obstacles, because the obstacles will never be constant, they'll always be varied, they will change from time to time.
Definitely.
But as of right now, the biggest obstacle and challenge remains the turnaround of the Sri Lankan economy from stability to growth. Until that happens, volumes, consumption, spending patterns, spending power will remain subdued. We are cautiously optimistic again that it will turn around somewhere down the line, somewhere down towards the end of 2024. We will turn the corner there, and consumption will pick up again, hopefully with vengeance. But till then, our focus remains on how do we continue making profits through productivity improvements. Again, what I spoke of earlier, operational improvements, process improvements, digital transformation, supply chain focus, those are all areas that we are pursuing as of right now.
Thank you, Moiz. And since we were talking about obstacles, definitely competition is also another big challenge for any industry. So it's also it's one key aspect, rather, I would say, in any industry. So if you could shed some light on how Hemas has navigated competition across all its segments, particularly in the home and personal care segment, and with Atlas? I think it will be interesting for the audience to know.
Again, number one, innovation. Innovating into the new products, the new categories, new growth spaces, which I spoke of in length earlier. The other one is investing into our brands, into our products. Because whilst the market remains subdued as of right now, we need to invest for that turnaround for when it happens.
Okay.
And that's something we continue doing. What margin improvements we bring into our P&L, into the system, we continue to invest that into our brands and into our products, so that we continue to grow our market shares and continue to further further strengthen our brands to pick up the growth that will eventually come around.
Thank you, Moiz. We have another interesting question on healthcare. Looking at FY24, what was the approximate percentage contribution given by the government buyback programs and also by the high margin branded generics to Hemas healthcare earnings? And how well did the branded generics segment perform during the concluded FY24? And what sort of a growth do you all anticipate by this segment going forward?
So the government buyback has held over years, and we see it as stable because Hemas continues to be a reliable supplier of high standards, which the government can depend on, and we take it upon ourselves to cater to that requirement as well. So that piece of our revenue will remain stable and is continue to be with us.
Okay.
Branded products, like I mentioned, we launched just maybe 1 or 2 branded molecules into the market, which has almost immediately gained market leadership. We have about 10 to 15 in the pipeline. Okay. So as and when those also go through the clearance of regulatory approvals, we'll see them also launch into our portfolio. And hence it's just going to be a key part of the total growth side of the whole pharmaceutical branded portfolio.
Thank you, Moiz. And given the time constraints, let me move on to the final question which we have from our audience. So Moiz, as the economic conditions improve in the country, in your opinion, which segment of Hemas, out of the segments which Hemas is currently present in, which segment is currently leading the way and why? And also, which segment is or which segments are lagging behind, and in your opinion, when can we expect these segments to bounce back and return to their normal pace? What are your thoughts on that, Moiz?
So between our 2 key large clusters, one is consumer, the other is healthcare. The larger profit contributor towards the total group portfolio is consumer. The larger revenue contributor towards our portfolio is healthcare. In terms of returns as well, it's skewed towards consumer more than it is towards healthcare from an ROC standpoint. In terms of which will grow in the future, well, we are investing in both because we see both as growth prospects. What's important is that we keep the portfolio as robust and well spread out and as defensive and rigorous as they have been. So as far as portfolio is concerned, we are broadly in 3 clusters, 3 verticals. The predominant large ones is the consumer and the healthcare space. Yes. Consumer caters to a larger proportion of the total group profit. Healthcare contributes to the larger revenue of the total group profit. Naturally, consumer also then therefore contributes to a higher percentage of the total. It contributes a higher ROC to the total group portfolio compared to healthcare. But I won't take these matrices as indicators as to which we want to invest into, because both have significant growth potential within Sri Lanka and we continue to invest in both. What's important is that we continue to keep the right portfolio mix between both the 2 clusters. It's not either or the other. It's a question of how we balance both and grow with both with the same kind of mix that we have had in the past years, which again, as I mentioned at the beginning, is a very defensive portfolio that holds well during tough times and grows well during good times. In terms of what is lagging behind, what's important is how has each of our business units grown over time. And like I said, our old businesses and the more recent ones that we've invested into, as of right now, they're all in the greens in terms of profitability. That's the most important indicator. So it's not about what's lagging behind, but it's about how we have made all our business units profitable and how we will continue to make them even more profitable in the years to come.
And I think with that, we can bring today's session to an end. So thank you once again, Moiz, for coming all the way and sharing all these thoughts, valuable thoughts with our audience today. Thank you so much. And also would like to extend a special thank you to the Hemas IR team as well for all the support that they've given us. And can't forget our audience. So would like to extend our gratitude to all our audience, valuable investors rather, who joined us today. We look forward to seeing you in another episode of Equity Edge soon. So until then, thank you and have a pleasant day.